Onto your markets news now. Asian equities ended in the red. This as the dollar maintained a two-year high and also as market participants assess the implications of the Fed Reserve's planned slowdown in its interest rate easing cycle, while also preparing themselves for the uncertainty that will come with a Donald Trump presidency from late January. The Nikkei share average declined by 0.3%. The Hang Seng Index closed down by 0.16%, while the Shanghai Composite Index tumbled by 1.96%. US stocks ended a choppy session with slight losses, although the Dow managed to eke out a slight gain following over 10 straight sessions of losses. This as the major indices struggled to rebound from the sell-off they suffered after the Fed made clear that it plans to take its foot off the interest rate cut accelerator pedal. The Dow Jones Industrial Average ended the session up 0.04%. The S&P 500 lost 0.09%, while the Nasdaq Composite Index closed down by 0.1%. Right, at the moment, we see that the local all-share index is down by 0.6% at around 83,948 index points. The rand is weaker at 18.35 against the US dollar, 19.06 vis-a-vis the euro, and 22.95 against the British pound. Gold is trading at $2,605 an ounce, while platinum is trading at $924 an ounce, while Brent crude oil is trading at $72.53 a barrel. Well, for more on the markets and to break them down for us, I'm joined by Warwick Lucas. He's a portfolio manager at Vunani Securities. A very good afternoon to you, Warwick. I see that you're already in celebratory mode, but let's get down to the business. Global markets, they do appear to be quite stagnant at the moment, and it seems that for the balance of this year, it's going to be pretty much uneventful.
I think that's a fair synopsis. I would say that we really have, on the whole, had some very firm markets during the year. They have predominantly been driven by a combination of interest rate cuts and moderate but positive growth. And I think they've given it all they've got. And I think, yes, there's a process of digestion that needs to come through now.
Yeah. So what's the outlook for the price of oil? I mean, it's been very uneventful on that front, never mind all that's been going on geopolitically this year.
Sure. So I think at the end of the day, in a lot of ways, the oil market is the purest kind of GDP demand commodity out there. And I think it's reflective of the disparity in growth that we've had this year. So we've seen a lot of growth in highly developed economies like the US that tend not to be as oil hungry, and the likes of China tending to struggle a bit. And I think then that's really the kind of dynamic we're seeing there, despite the punch-ups in the Gaza Strip and precautionary sort of standing in the Middle East. It's still, at the end of the day, with supply and demand, it's led to a little bit of softer demand on the oil side there.
Yeah. You know, earlier today, as I was on air, I saw the news coming out that Donald Trump wants the EU to buy more oil and gas from the United States. Failing that, then he's going to impose tariffs on the EU. That's a lot of bullying that's going on. How do you think that's going to shape up?
Well, I think he's got quite a exuberant turn of phrase, shall we say. And I think if I hark back to the 2016 to 2020 cycle, a lot of what got said before the elections didn't really tend to follow through in size in the actual presidency itself. I think the job has got a way of reining in the individual in that they've got a lot more work on their plate and less time to start making things up. So I would expect quite a lot of that kind of tension to start fizzling out. And I mean, if we look at the European economy, it's a cautious year ahead for them. I mean, I think they're only one of the major centers where we're really going to see a lot of interest rate cuts in the year ahead.
And one last comment on another commodity, the gold price. I mean, that really went up quite nicely, with some people estimating that that would hit $3,000 an ounce. But a lot is changing in terms of the dynamics that were pushing the gold price. Do you think that $3,000 an ounce is pretty much off the table now?
I think the key issue with the run in the gold price was the cost of holding it and the risk of inflation. And I think the sense of a big inflationary burst coming through from the Trump government, I think that kind of fear is receding. We do, of course, see that the bond market is a bit weaker going into year end, but I'm not seeing the kind of fear that would justify a run in the gold price up to 3,000 at this stage. I think pretty much the year ahead, I mean, we're looking really at an extrapolation of what we've seen in the last 6 months. So right now, we hope not a lot of surprises.
All right, indeed. Thank you so much, Warwick. Thank you very much for your time and insights. Have a great festive. That was Warwick Lucas. He's a portfolio manager at Vunani Securities. We're going to take a quick break.